In a recent coaching session, I was working with an agent who needed a program that allowed low to no down payment. The buyer wanted 2 or more acres of land, and the agent is relatively new to the industry and had heard of USDA but was unfamiliar with the program. So that got me to thinking about how many other agents could benefit from learning more about this amazing program. So today is all about the USDA Rural Development Guaranteed Loan Program. Hi, it's Tara of Westchester Realty, where we train, coach, and mentor real estate agents through digital media, live events, and coaching, sharing practical ways to help you grow your real estate business. What is the Rural Development Guaranteed Home Loan? Well, for some of you, this is old news, but for those of you who are new to USDA loan, I want to simplify it. The program helps approved lenders make 100% financed, no money down mortgage loans to eligible low and moderate income buyers. The benefits: no down payment, flexible credit guidelines, fixed interest rates. It is not restricted to first-time home buyers. There is no limit to the amount of gift funds a buyer can receive, and the seller paid closing costs is up to 6% of the sale price. Eligible properties must be located in an eligible rural area. It must be a single-family dwelling, which includes detached, attached, PUD, or planned urban development, condominiums, modular, and manufactured homes. Buyers can finance an existing home to include the cost of rehabbing, improving, or relocating the dwelling, and they can also build a new home. As well, there is no set maximum purchase price. The loans are based on applicants' repayment ability. There are no set acreage limits, although acreage must be considered common for the area. And there are no seasoning requirements, which means that flipped properties are allowed. So let's talk about buyer qualifications. Borrowers must demonstrate stable and dependable income for a minimum of 24 months in most cases. They must be a U.S. citizen, and no down payment or reserves are required. Loan structure. Buyers can finance up to 100% of the property's appraised value, not the purchase price, which can include closing costs and home repair expenses into the loan. The loan is partially insured against default by USDA and offers both 15 and 30-year fixed rate options. Now, borrowers will pay mortgage insurance at a rate of about 0.4%, which is less than half the cost of FHA's monthly mortgage insurance fee. So the loan can be used for new or existing residential properties that are going to be used as a permanent residence. On a site with new or existing dwelling, it can be used for refinancing, special design features, or permanently installed equipment to accommodate disabilities, reasonable and customary connection fees, assessments, or the prorated installment costs for utilities. Eligible costs that the loan can be used for are real estate taxes, essential household equipment like carpeting, ovens, refrigerators, washers, dryers, energy efficient installations like insulation, solar panels, double pane glass, installing fixed broadband service, site preparation costs if you're building like grading, foundation, landscapes, fences, or special design features to accommodate physical disabilities. So some loan expenses and closing costs that can be covered in the loan are legal fees, architectural, engineering, title exam, clearance, insurance, transfer taxes, recording fees, appraisal, inspection, survey, and homeownership education. Additionally, the buyer can finance discount points to permanently reduce interest rates, eligible fees that do not exceed FHA and VA or affordable lending guidelines, escrow account, your taxes, your insurance, as well as the upfront guarantee fee. There are several loan restrictions that you should be aware of, one of which is existing manufactured homes. They will not be financed, although new manufactured homes are allowed. Income producing land or buildings is also not allowed, or business or income producing enterprises cannot be purchased with this loan. Credit requirements. So there is no minimum credit requirement for USDA loan. However, buyers with a credit score of 640 or higher are eligible for streamlined processing. Now, buyers with a credit score of lower than 640 are still eligible to receive a USDA loan, though they will be subject to standard underwriting processes. Now, most USDA approved lenders require a minimum 620 FICO score. Lenders will assess the length of credit history, repayment history, credit utilization, and credit score to determine approval. Now, if your buyer has a non-traditional or no credit history, the lender will evaluate his or her eligibility on a case-by-case basis. No set loan limit. The USDA does not set loan limits. Rather, it evaluates borrowers on an individual basis to determine their maximum loan amount. Maximum loan amounts are based on factors such as debt-to-income ratio, monthly income, their assets, credit score, or mortgage payment history, as well as the value of the property. Now, this is a good one because secondary homes can be purchased under this program. If your buyer already owns a home and intends to retain that property, they're still eligible for a guaranteed loan to purchase another home if they meet the following criteria. The current property isn't financed by a USDA direct loan or a guaranteed loan or active grant. The buyer is financially qualified to own more than one home. The buyer intends to use the property as their primary residence throughout the term of the loan. The current home no longer adequately meets the buyer's needs, especially in the case of overcrowding. The disability or limited mobility of a permanent resident of the household cannot be accommodated without substantial repair of the current property, or if the buyer is or has to relocate with a new employer or has been transferred by their current employer to an area outside reasonable commuting distance. USDA Rural Development Income Limits. The USDA income limit is based on the sum of income of all household members over age of 18, regardless of whether their name is on the loan. To qualify, the gross household income must be less than 115% of the county's median income. Income limits can increase based on the number of individuals in the household and the county of the property. So let's take a look at some income limits. As you'll notice, in North Carolina, low-income borrowers can purchase when their income does not exceed $42,500, but moderate income purchasers can purchase when their income does not exceed $110,650. You'll also notice that across the board, the income limits do vary some, but you should check out this chart to make sure of what your specific area income limit is. I'm going to take another look. I'm going to take a look at California. California income limits are $41,250 for the lowest end, and for moderate income buyers, it's $111,000 in income. One additional area, let's take a look at Oklahoma. Oklahoma on the low end is $39,300. On the moderate side is $110,650. So as you will see, income limits vary. And so that means that you can get more buyers into these programs. You can get low income buyers and moderate income buyers into this same program. USDA does maintain a property eligibility map, and a common belief is that USDA loans are reserved strictly for farms or homes in rural areas, but not always. Many homes in suburbs outside of small towns and even some major cities also qualify. So make sure you take the time to look at their property eligibility map to determine whether your buyers can purchase in an area that they are interested in. If you would like more information on the Single Family Housing Guarantee Program, make sure you visit the USDA Rural Development website, where you can get information on how to apply, other requirements, who you may contact, and events that you can attend. So what does all this mean for you? Well, because loan qualifications are more lenient, USDA buyer incentives allow for more qualified buyers in your pipeline. You are also able to service more buyers as the income limits allow for a diverse range of potential purchasers. This training would not be complete if I did not tell you a little bit about the direct loan program. And although I'm not going to get into a lot of detail, I did want to mention it. So the direct loan program provides payment assistance to qualified applicants from households with incomes below 80% of their region's median household income. The program is for buyers who do not qualify for the guaranteed loan program. And you can find more information on the USDA Rural Development's website. Well, that's all I have for now. I hope you'll use this tool to increase your pipeline of qualified buyers and that you'll share the information with an agent who might find it valuable, and subscribe. I really appreciate your support. Until next time, I'm Tara Tillman of Westchester Realty.